I'm David Temko, President and CEO of C2 Financial, the #1 mortgage broker in America. I'll be your host today, and I'm excited to introduce our presenters. Before we get started, I want to call your attention to the chat feature on the top right corner of the webinar screen. If you have any questions throughout the presentation, please post them there. We'll be answering questions at the end of the webinar. So let's get started. Joining me today is Kenny Simpson, a seasoned loan officer and top producer at C2 Financial. Kenny is not only an expert at originating, but he has developed a strong following through his podcast and social media presence, where he shares valuable market insight and marketing tips. I'm excited to have him here to share tactical advice, specific things that loan officers and realtors can do to win in 2023. Also joining me is United Wholesale Mortgage, who was recently named the largest lender in the country. Originally, Matt was going to be on this call, but had an unexpected emergency. So we're excited to have Alex, Chief Strategy Officer, join us today to share his perspective. So let's get into it. Let's start by taking a look at where the housing currently stands. According to the California Association of Realtors, single-family home sales totaled just over 274,000 in October. While that's 37% down year over year, that's still a tremendous amount of velocity in the market. My understanding is 10% of these were purchased all cash, and according to the IMF, brokers financed just over 22% of these. So that means that 68% of these were financed by banks and retail originators. That also means that 68% of buyers may not have even seen options from the wholesale channel and brokers like yourselves, options that are often more competitive and save them money. So now is the time for brokers to take more of the pie. Now more than ever, agents and borrowers need brokers. They need experts who have access to competitive products for any borrower scenario. Banks can't provide this. They have static product portfolio and a hard time pivoting. They're hammering round pegs into square holes daily, and it's brokers who are nimble and can help borrowers navigate this market successfully. So how do brokers increase their market share? Well, it's no secret that today's market conditions are drastically different from 6 months ago. And I know several of you have been in this business since before 2020 and 2021, and it's time to get back to the basics. We're facing high mortgage rates, falling home prices, and scared buyers and sellers. But where there are challenges, there are also opportunities if you're in the if you have the right strategies, because I believe there's opportunities in every market, and we're here to discover those today. Today, we're going to share these strategies so whether you are an LO or a real estate agent, you can be better prepared for 2023. So I'd like to hand this off to Kenny. Kenny, take it away, my man.
Hey, David, thanks. And thanks, guys, for joining. So I want to start with a quick story. So yesterday, I'm a part of this mastermind, and part of the mastermind is loan officers and realtors all over the country. And what we're really doing is we're sharing, strategies, what's working, whether it's social, email, video, networking. And we had a guy on the call yesterday who actually I know. His name is Cody Sperber. If you ever heard of him, the clever investor, massive following online, real estate investor coach. But he came on and said something very important. He's been in this game for a long time, like maybe some of you. But he said, look, in the next 6 months of what you guys are going to do in your business is really going to determine what's going to happen over the next years, or if you're going to stay in this business, right? So he is a big proponent of video, of email, of social. And he just said, you've got to go all in, go crazy with it. You can't be shy. And that's really today what I want to jump in and talk about. The experts at the high level that you and I see on social all the time, whether you get their ads or you see their videos or you watch their podcasts, the people that I get to sit next to all the time and talk to over and over, they keep saying, build your brand, use email, use social, right? And so today I want to talk first off, what exactly is the client saying? What's going on? You're dealing with buyers. I'm dealing with buyers. Some people are dealing with sellers on this, and we're having the same conversations, right? So pro tip number one, let's start with that slide, is what are the buyers saying, right? So most buyers right now are super nervous. They're nervous because they don't know what's going on. We came off of a market that was with low rates, tons of money, and now all of a sudden we went to high rates, inventory changing, uncertainty in the economic market and all that, right? So they're looking for something. They're looking for the buyers, the sellers, they're looking for your agent, they're looking for the loan officer to basically talk to them. Like, what is going on? How can I win in this market? So either they're going to get their news from CNN, Fox, or their brother or their cousin, or they're going to get the information from us, right? So number one, what are they thinking? I can't afford anything. Rates are too high. Prices are still high. I don't see any deals happening. Why would I buy? Shouldn't I rate? We're hearing all the same things over and over. Why should I list my house right now? I can't even go buy another house, right? So what are some of the stuff you guys are talking about? Here's some of the things that I'm talking about with my clients and part of these masterminds that they're all talking about that are helping our clients get over this fear factor, right? So for example, number one is, how can they get the price they want on that property? How can they get the closing costs paid for? How can they get the rate they want? So let's go over some of those tactical things. Number one is financial solutions. So if you're the loan officer on here, what do we have? We have a 3-2-1 buy down. We have a 2-1 buy down. We have a 1-1 buy down. But these conversations have to happen up front when we pre-qual them so we know what to put in the offer. Also, the other thing is, are they paying for closing costs, right? Is the seller paying for the closing costs? Are these conversations happening up front with the buyers, with the agents, with the loan officers? That's like tactical advice number one. You got to do that. And the second thing that I'm seeing that's huge, and I'll give you an example. I have a client, VA, bought a 3-unit, was in contract for 1.2 million. The value came in at $1,150,000. He was not happy. On the second negotiation is when you remove loan contingency. He went back and said, hey, look, I'll buy this place for $1 million and I still want a $20,000 credit. Obviously, for the seller, they thought they were selling this property at 1.2 with the $20,000 credit. Well, that deal closed at 1.1 at $20,000 credit. But here's the problem. You and I know that. The agents on that knew that. I knew that. That client knew that. But does the general public know that these are the type of transactions going on? Do they realize people are getting price, value 100,000, over $100,000 price reduction on properties? If we're not telling them that, if we're not spreading the word, if we're not getting that message out there, how are they going to know? They just looking at what stuff is listed for. They don't really know what it's sold for. They don't know how to find the data. And that data has to come from you and I. And the other thing is, what I'm seeing too is on that second negotiation, I'm seeing, if the roof has a leak or you're going to pay for the solar, the negotiation power that buyers have right now is unprecedented. Last year, you had to get a property, you had to remove all contingencies, send their family to Disneyland, walk on water just to get in front to have an offer accepted. And today, it's the complete opposite. So it's our job to educate our clients up front. These are the type of transaction that's going on, right? And we basically have to tell them, like, hey, there are deals. There are people getting the deals, and you can buy down the rate. And when the rates come back down, we can refinance. So let's move on to pro tip number two. And pro tip number two, I wanted to talk about for the sellers. Like, Kenny, why are you talking about the sellers, right? Well, it's a big thing. If you're an agent right now, right, or even if you're a loan officer, that this seller is going to sell their property and move on to buy another property, what are they doing? So for sellers, for example, and I know they're doing it now, is if you know that the buyer is going to come to you and want closing costs paid for, pay down the loan, or maybe stuff fixed, why not write in your offer in the listing, hey, we're willing to credit 30,000, 20,000. We're willing to do a 3-2-1 buy down. Put it on the description, the listing, because as a buyer, you've already checked off, I don't have to negotiate that. And the other thing is, if you have a house and it has problems, the AC doesn't work, there's roof problems, there's maybe electrical plumbing problems, why wait? Why not go get an inspection yourself, put up the money, right? Then go get the bids, go get the roofing bid, the electrical bid, the plumbing bid. So when that buyer comes to you and says, hey, Bob, I want to go ahead on the second negotiation when I move contingencies, I want $100,000 off for this stuff. You can go to the buyer and say, hey, look, I completely understand, but I have bids here from reputable companies that said all this can get done for $50,000. What does that do? That helps the buyer, the sellers, the agents, the loan officers, everybody that's working on that transaction to go, great. The seller's serious. They're in their listing. They're showing they'll cover closing costs. They have bids of stuff that they know that needs to be repaired to show you, saying, hey, I know you want this repaired, but it doesn't cost $100,000. It costs $50,000. I'm a serious seller. I'm being serious. And this is how deals are going to get done. And also too is, if you are a buyer and you're going to go in and, I hate to say it, if you're going to write an insulting offer, which might have been a year ago, but now, and you're going to write a lowball offer or something that you think you're willing to buy for, you also want to write an offer that's quick and deliverable. That seller wants to know what? What do they want to know, guys? They want to know, are you going to close on this loan? Are you really going to get to the finish line? Maybe the deal already fell out. Maybe the house has been sitting on the market for 60 plus days. We just don't know what's going on with the seller. But as a buyer, right, we have the ability at C2 Financial to say, you want to close in 10 days? You want to close in 15 days, right? We can do that stuff. But if you're going to write a low offer and I can say, hey, Bob, I'll move contingencies. We'll get the price on. I'll close this loan in 10 days, get this house out of your life and move on. And that's why I'm basically giving you this low price offer. But we have to have tools in our kit to do that. So the final pro tip number 3 is let's get into tactical. All this stuff is great, right, guys? We can sit here and talk about it. But if we're not delivering this message to our audience, how are they going to know anything? And when I mention the word audience is people that are in your life, your friends, your clients, your associates, the people that are in your email database. Those are your audience, right? So, for example, I meet with so many realtors that never email anybody. They don't email anybody. So I'm going to go through a couple tactical things that is working for us that I've been doing over the last 2-3 years. And don't get me wrong, I started this process too, guys. I sucked at video. I didn't know what to put in emails. I didn't even know how to do any of this stuff. But over time, I've been able to, with the help of Monty on my team, who's our marketing director, we've learned how to build and scale a marketing team using Monty and virtual assistants. It's where it's cost effective. But we're going to give you a couple tactical things today that are very simple to go over. Number 1, before we jump in, is pick one social media platform to focus on. Yes, there's Twitter and TikTok and Instagram and Facebook and all this stuff and YouTube. But if you start focusing on everything, it gets overwhelming. So, for example, let's just pick Instagram, right? Pick Instagram, go all in and master that and be consistent of it. Number 2 is email. Who are you using for a CRM, right? Do you even have your database set up? Get a CRM, upload your database because you have to start sending emails. And number 3, which I know is painful, is video. Trust me, guys, if you stuck a camera in my face many, many years ago, I'd probably throw it on the ground and say, get it out of my face. But I come to realize over the last 2-3 years, whether it's a podcast, whether it's a 60-second clip on YouTube or Instagram, whether it's the videos I send out weekly with my rates to my clients, video matters. Giving intel matters. So when we break all this down, we need to educate our clients of what's going on. So we went from a booming, crazy market, which some people didn't understand. And then now we're getting ready to pivot to a new market. And we really don't know what that market is yet because we haven't fully adjusted, right? The feds are all over. Rates are still coming down. Inflation's coming down. We might have a recession, all this stuff. And what we're talking about is a gap, right? So that gap is where this insecurity comes from, where we went back to, pro tip number 1, the slide is where people have fear. The gap is fear. And the fear is because nobody knows what's going on. And those people are either going to go to your competitor, they're going to go to the news, they're going to go somewhere else to get this information. So why not be you? Why not use video? Why not use social? Why not use email to tactically send information to your clients? Whether it's a simple video, whether it's a blog, whether it's a newsletter you create, you have to be consistent with this stuff. I've been doing this stuff years and years, and now it's really paying off because my clients, when I see them in person or on the phone, or I get texts or emails, I appreciate the information. I appreciate to know I know what's going on to the market, right? And share your success stories. Share how your client just bought the property for $100,000 less. Share how you help negotiate the $20,000 to pay for the 2-1 buy down. We need to share stories. We need to share success stories. We also need to go on social media. And it's not just sales. It's education. It's collaboration. You guys, maybe an agent, maybe your LO, you're on this together. Why are you guys not collaborating? Do a webinar, a first-time homebuyer webinar, a webinar, how to get a deal in 2023. Collaborate with your agents, collaborate with whoever you can. So as I went back to my friend Cody said, those who are going to do things like network and send emails and videos and content at an excessive rate, are you're going to see them really win in the future. And the people that are the top, agents or loan officers or whatever in your industry are around you, most likely they are doing something that's really consistent and really helping their database, their audience get through this time. And so last I will say is I'll go through real quickly. You guys might have questions about what I'm using for my tech stack. So I use for LOS, I use LendingPad that talks with FlowFi, and I use Bonzo for CRM. And really, I have a lot of automation set up. I have drip campaigns set up for the first time home buyer. Maybe for somebody you're going to refi, maybe somebody that's already in going down the process of purchasing. So this takes time, this takes effort. But guess what, guys? Most of us that are on this call, most of us that are in the real estate industry, we all know you can talk to people in title, escrow, notaries, lenders. Everybody has more time than they had the last year, right? And it's what are we doing with that time? There's no better time to set up all this stuff. Find some people that are your partners. Maybe there are other LOs, maybe there are other agents that right? That you can team up with. Maybe create drip campaigns, maybe create webinars, maybe create great hooks that you would use for Instagram to capture people to get, to get people in. Reach out to fellow agents that you don't know on social media through, DM or instant message them and have them meet up with you that maybe you've closed a deal with, right? We've got to get back to the basics, like David said, and what's worked before, what's working now. We can't just depend on, the rates are going to drop to 2.5%, 3%, and that's how we're going to get business. So tactically, this is where we're at. And then a couple things I will say is if you are going to do one email a week, then consistently do that email every week on the same day. If you're going to post to social media, then consistently post one or twice a week, then consistently do it. What your audience eventually is going to realize is, wait a minute, where's that post from Kenny or Susie or Bob or David that I get on Instagram? Where's my weekly newsletter every Monday or Wednesday from Kenny? They get used to it. They share it. They send back to you. They send it to clients. This is how you get referrals. And this is how I've been able to grow my business outside of other traditional stuff to basically keep it moving. And in these tough times, get in front of more and more people and continue to build that database and keep messaging to them. So I appreciate you guys, your time and listening. And David, back to you.
I love all that, Kenny. The collaboration mentality, bringing people together to help people grow and developing good habits. It's how we all continue to grow and how we get better every day. And it's how we make progress. So thank you for all those tips. I'm excited to see the folks on this call take them back to their desk because that's what it's all about. You can hear them from Kenny, but if you don't put them to work, they won't work. So go back to your desk, after this and let's make it happen because it's what we're going to have to do to take on 2023. So I really appreciate all those tips and that feedback. All right, so Matt's not here today, but I did get a video from him. I know that he's working on some exciting things, an emergency that came up. There'll probably be some news from it. I don't know, but I want to launch that video right now and hear his thoughts.
Hi there, C2. Matt Ishbia, President and CEO of UWM. Thank you for having me here. Sorry that I'm not on it live like I planned. Had an unexpected emergency pop up where I can't do it a little later this afternoon when I was supposed to be on it. So I wanted to film this. A couple things that David had reached out to me about what you guys are doing at C2. Some things going on in the market. Give you my thoughts, my belief system on a couple of these things. Hopefully it's valuable to you. At the same time, I'll turn over to my Chief Strategy Officer, Alex Elezaj, who can go in more in depth on a couple of these things. But I know the market's interesting right now. Rates obviously went down yesterday. Rates are up, down, all different things. But the key thing here is right now is how do you win not only the next 3 months, 6 months, but for the long term. And there's all different things that we're looking at. So, marketing, lead strategies that other brokers are using out in the market. So loan officers and real estate. I know there's some real estate agents on here as well talking about how to grow, how to win. And I think the big thing here is this. I always try to figure out what's got the biggest reach for the lowest price. And social media is the easy answer across the board. I don't care. I'm not just talking about Facebook or LinkedIn. I'm talking about Instagram. I'm talking about TikTok. I'm talking about all these opportunities. Social media is the easiest way that you can start right now. Put a video out. Go out there. Don't worry about if you get 2 likes or 10 likes or 200 likes. It doesn't matter. Over time, that wins. And so we've seen that winning for brokers. that's the big one I've been talking to a lot of people about, is get on social media. The other one that's free as well is getting on the phone and making calls. Real estate agents, call real estate agents and try to get them on the phone and have meetings with them. Explain how you can add value. Real estate agents do the same thing with like, how do you differentiate yourself? And sometimes you got to outwork people. That's the lead generation that works these days. It's not like, oh, there's this lead source that no one knows about it. It's going to be free. Like, that's social media. There's no other either one out there. So that's a big thing. Now, the other thing that we want to talk about is about products. What's out there? Listen, everyone wants to talk about, oh, I got this product, this non-QM. 97% of loans are Fannie Mae, Freddie Mac, FHA, VA. Like, that's what the programs are. So what programs do you need to use to leverage in these conditions? Right now, it turned from a seller's market to a buyer's market. What do you do with that? Real estate agents understand that people are lowering their prices to try to get people in there because affordability is an issue. So first off, I'd understand the affordability, home ready, home possible programs, and the first time home buyer programs on the borrower smart programs that UWM has. No LLPAs, no loan level price adjustments, so lower rates. As we already know, mortgage brokers have lower rates than retail already by a wide margin. And so this is just adding to that. But beyond that, what I'd really be talking about is the 2-1 buy down, the 1-0 buy down. So instead of lowering your price, use seller concessions to take care of the 2-1 buy down so that the borrowers can get in the home and they have a lower rate. It's like, why? Oh, I don't do an ARM. ARMs aren't as good because ARMs can go up. A 2-1 buy down is locking you in as a 30-year fixed borrower that has a lower payment by 2% the first year and 1% the second year, and then it goes for the next 28 years at the 30-year fixed rate. That's a big differentiator. And so understand that these products are out there, and that's why loan officers have to understand them, real estate agents have to understand them, you have to explain them to the consumers. And so we're seeing a huge hit on the FHFA, the lower loan size ones, or lower LLPAs or no LLPAs on those for first-time home buyers. That's huge. And then the 2-1, 1-0 buy down. But don't get crazy on, oh, I got to do this program, this program. Well, we're seeing the reality is simple. Majority of the loans are conventional and FHA and VA. That's where the market is. Focus on where the fish are. Fish where the fish are is what they say. Dominate in that market. And the last couple of things I'd say real quick before I turn over to Alex Elezaj, let him go through, because I don't want to go through. He's like, how do we see the market anticipating for 2023 and 2024, right? Mortgage brokers are the largest they've been since 2009. C2, you are one of the biggest mortgage brokers in America, one of the best mortgage companies in America, and you're going to grow. Right? The broker channel is only 22.25% of the market in the third quarter. That's the highest since 2009, but at the same time, that means 78% of the business is out there. People are still working with real retail loan officers. Retail loan officers charge higher rates, have clunkier processes. You have every advantage. I see 2023 as the breakout year where brokers take more market share. We position ourselves for 24, 25, 26, and beyond, where it's going to be amazing. The rates are going to drop. Every borrower you do right now, the biggest thing I would tell people, real estate agents, and mortgage brokers, is this: rates are going to drop. Affordability will become easier for you real estate agents. Don't worry, it's going to get better. The 2-1 buy down will bridge the gap, but it's going to get better. But also when that happens, rates go down. What happens when rates go down? Rates go down, refinances come. Every borrower you do right now is good for 2 or 3 more loans in the next 3-4 years. That's how I think about it. So client experience is everything. Close fast, dominate it fast, wow the client, send them a closing gift after the fact. Dominate right now. Those are the tools I'd be using, is make sure I use the ultimate submission so I can wow the client experience, because you're going to do 2, 3, 4 loans for this borrower over the next 3-4 years, because rates are going to go from 6 to 5, 5 to 4, 4 to 3. All these opportunities are going to happen, and you can take advantage of it. Thanks for having me, guys. I'm sorry I can't be on the whole thing and be live with you guys. Alex Elezaj will do a great job. David and C2, you guys are doing amazing things. We're so proud to be a partner here at UWM. Excited not only to win in 2023, but 24, 25, and beyond. Thanks for having me. Have a fantastic day.
Well, there you heard it from the man. Matt Ishbia unfortunately couldn't make it, but had some nice words. And it's always funny. I think it's interesting that he's telling us to get on TikTok and Instagram and all these social media platforms. I remember a late partner that we had here at C2 once said that the internet was going to be a fad. Well, that was definitely not the case. So I guess if you're not doing social media, he's encouraging you to do it, and I'll encourage you to do it too. I'm working on it myself. So now we've got Alex, and I wanted to get him on. I want to do a little bit more fireside, even though I'm on fire here. So I will X out of this. And Alex, so you're the Chief Strategy Officer at UWM. Why don't you give a little brief background about yourself and kind of what you do over at UWM for us?
Great, David. Thank you. And congrats to a great year for you and your whole company. Obviously, you guys are the biggest in the country, and you do such a great job. So congrats on all your success. look forward to continuing to build the relationship in the future together collectively. So thank you again for having me. My name is Alex Elezaj. I head up corporate strategy, capital markets for the company. Our team is also, and I'm always also responsible for maintaining all the relationships at the GSEs, so Fannie, Freddie, Ginnie, with FHFA. So we're very in tune with what's going on in the marketplace. And although Matt did such a great job and so enthusiastically, as he always does, talking about the key points that he wanted to communicate, hopefully I can, give a little bit of my own iteration on different things if you have any questions as we talk through things. But I can tell you from our perspective, we're very excited. We're very excited. We recognize we're in a dynamic marketplace. The mortgage market is cyclical. It goes up, it goes down. But we're excited about 2023. We recognize that this is an opportunity to win. In these markets, this is when winners win. This is when you put in the extra work, the extra effort. Nothing should come easy in life, right? Especially when you're number one. You guys are number one. We're number one in what we do. And not only did we become number one overall in all of mortgage lending, but we were the number one purchase lender for 3 years in a row now. So next year will be the 4th year. So these are things that, we believe the purchase market is the fundamental foundation of a successful mortgage company and a successful loan officer. So that's what we focus in on. And I like to hit on some of the data points to kind of reiterate what Matt was saying. But at a high level, that's who I am. That's what our team does. And I look forward to engaging in conversation with you.
Absolutely. From a strategy of, the largest broker here, and you're the largest lender in the nation, what kind of ideas, are there any things that you guys are coming up with that might be able to add some value to the brokers that we have here, that they might be able to leverage walking into 2023?
Yeah, so I'll tell everybody, you're basically running your own businesses, right? So I would tell you that although we've grown to the number one mortgage company in America with 7,000 people, we still run it like we did when we had 13 people, right? So I would say be in the weeds of everything that you're doing, be in the weeds of your business, and how that relates to everybody on this call is, like Matt was alluding to, don't overcomplicate things. Yeah, we have all the social, we have all that opportunity, but sometimes, look at your past clients. It's nice to hear your voice. Look at the normal blocking and tackling. I'm a consumer. Everybody in this call is a consumer. I sold my house 4 years ago. I've never heard from my real estate agent ever since then. And they're one of the top, 5 or 6 real estate agents in the state of Michigan. So I think to myself, is everybody on this call making a phone call, thanking your past clients for, hey, happy Thanksgiving, happy holidays, how's the family doing? Yes, you can do the TikToks, you can do the Instagrams, you can do all that stuff. But sometimes it's just fundamental outreach, the blocking and the tackling, things that help you grow your business is still relevant today. Another story I'll share is I just went to a restaurant about 2 weeks ago on a Friday night. The next day, it's like a normal restaurant, nothing crazy. The next day I got a phone call from the restaurant. I actually thought I forgot something and maybe like, hey, they're calling me. And they're calling me to thank me. They're saying, hey, thanks for coming in last night with your family. Is there anything that we could have done to make your experience better? And by the way, if you're happy, why don't you let one of your friends or family know to come in and join us if they haven't been to our new restaurant yet? These are the little touches. Now, could they have done something on social media? Of course, but sometimes just a very simple phone call means a lot to people. So I look at things in a very fundamental way, in a very simple way. Don't overcomplicate it. Kind of stick to a lot of the blocking and tackling.
Absolutely, keep it simple, right?
Yep.
Well, I'm thinking that when UWM started and C2 was a lot smaller, we probably had a lot less than 22% of the market share being loans that were being done by brokers. And I'm sure there was a lot of strategy to get to that 22%. And that was probably, a lot of that blocking and tackling. I'm trying to think, and I'd love to hear your perspective on outside of, making those calls and developing those relationships, but what we can do, what our loan officers can do, and as a wholesale lender and as a mortgage broker, to get it to be more of a common thought at the home, at people's home. Like when they think about, I want to buy a house or I want to refinance, getting away from the idea of, I need to call my banker. I actually need to call my broker because my broker has, better options, and I want to hear it from him or her first. I'm just trying to think, big picture on strategy on your side. What are you guys thinking to get it from 22% to, 25% to 30%, and really getting to that 50% mark and then pushing it over the scale? Is there any kind of big picture things that you're working on from a strategy perspective there?
Yeah, David. So it's interesting, we're trying to get into territories that we've already been before as an industry, right? Pre-crisis, the mortgage broker market was about 50% of the market, and then post-crisis it dropped down all the way to 8-9%. So the fact that we're at 22% today just shows that we're continuing to get up and we're going to continue to grow. So getting to 33% by 25 or 26 and even higher than that is a very reasonable target. The way that we look at it is like, why can't it be 50, 60, 70%? The answer is consumers either aren't educated, they don't know where to go, or obviously we have to continue to recruit LOs from retail to join the wholesale market and kind of come back home, if you will. A lot of these people were in wholesale before, they went over to retail, but now we're getting them back. And obviously the new products that we're doing, the success of being fast and a lot cheaper is getting people back into the market. And we're seeing it. I mean, we're getting retail conversions, hundreds a month are coming back into the wholesale channel. So the way that we look at it is like a rising tide will lift all boats. And, as the more that we get retail LOs to come back into the market, we'll continue to grow market share and win together. One thing I'll touch on, just to put numbers behind it, we talk percentages. If you think about 2023, a lot of the forecasters will say it's about $1.5 trillion market. Let's say they're wrong, like they usually are, and it's let's say it's $1 trillion market. All right, $1 trillion market means brokers, to use the numbers of the third quarter, is about 225 billion. That means 775 billion, next year is not even in the wholesale channel. It's in the more expensive, slow channel. So you think about that opportunity, you're talking about over 2 million loans, just using average loan values. You're talking about 10, 15,000 loans a day. And that has nothing to do with refis. This is strictly like purchase business. So for me and for us and for everybody on this phone call, like there's a tremendous amount of opportunity out there. The business is out there. People are moving, people are buying homes, life events, things are taking place. But it's all the things that you guys are doing and everybody's talking about now to use social, use your platform, making the phone calls, knowing the products, knowing all the different products that we're launching. We've obviously done the buy downs and we're the top lender and all the affordability, as Matt alluded to, home ready, home possible, borrow smart, all of these things that we're doing to help borrowers. And the average borrower, and I'm sure you guys know this through our own campaigns, the average borrower saves $9,400 going through an independent mortgage broker. It's a lot of money. It's actually over $10,400 for a minority borrower. So the way that we look at it is, look, why wouldn't you use an independent mortgage broker, right? Lower rates, lower fees, it's faster, you have more options. So to me, it's more of an education thing, and we're going to continue to drive the education. We're going to continue to drive the awareness at the Fannie Mae, the Freddie Macs, the GSEs, especially FHFA, to really help promote brokers. And obviously, when we went public a couple years ago, that was one of the driving factors of us going public, is to really shine a light on mortgage brokers and all the great things that they're doing throughout the country, not only with UWM, but many other lenders that they use.
Yeah, no, absolutely. You touched on, educating and awareness. And I think those are two huge components to give buyers, borrowers, anybody that's, looking to get into real estate, whether it's for a home or for investing, to sharpen their pencil and and be on the edge of knowing what's going on, knowing how they can be walking into a deal and taking the most advantage of financing available to them versus, working with a retail loan officer that's just hoping that they don't talk to a mortgage broker because they're going to be, they'll be smoked out because they're trying to sell a rate and a product and they know it's not as competitive of what's down the street, and they just are praying that client isn't going to go do that. And that's not what, is best for the client. It's unfortunate that's out there. So we're trying to get away from that. So I've got to ask, because this is kind of a, I'm in California and I could probably count on one hand how many zip codes are not jumbo loans from a purchase standpoint. It's always been kind of the elephant in the room from the brokerage side. It's been a tough thing for us to compete, against big banks on, because, we do sell, the smaller loan amounts. Just curious if you guys have ever, or if you're working on maybe a jumbo product, or if that's something that might be coming down the pipe.
Yeah, I mean, we've launched a couple jumbo products this year, obviously made them better. And just like, how we do things, we launch things and then we tweak them when we make them better. So you'll continue to see improvements in the jumbo. We're continuing to work on developing the product to be more competitive. Obviously, the banks and the credit unions have a little bit of an advantage just in their cost basis, and they're paying for that customer acquisition to cross-sell them on a lot of different things. But we're going to continue to fight through it. And I think you'll be happy with some of the things that, we're going to be launching in 2023.
Amazing. I do have a question that came through, and it was, what do you think about the idea of doing year-end checkup on calling current clients to see if they are still in need of mortgage insurance? MI. Clients may unnecessarily be paying MI and would appreciate their mortgage consultant staying on top of this. So anything like that on the MI basis that you could help with?
Yeah, I mean, I think that's a good touch base. But again, I don't think you have to wait for something like that. To me, it's just natural that you want to stay in touch with your past clients. And it could be as simple, we talked about life events. I'll use my own situation. When my kids were getting ready to go to college, I would have expected my loan officer to reach out to me and say, hey, Alex, hey, I know your daughter is 18 years old. Your other kid's right behind it. I'm not sure what your plans are for college. You have some equity in your home. Do you want to take out some equity at the time, pay for college? Or do you need to downsize? Are you looking at a different size house? Are your kids moving out? Let me connect with my real estate agent. Let us put a couple listings together. Even if I don't want to move, even if I'm all set, what it shows me is that they care. What it shows me is that they understand what's going on in my family. And those are the things that the reality is, that's what people really care about. There's plenty of places to get a mortgage. There's plenty of places to buy a car. There's plenty of places to get your insurance. Why do we all as consumers choose to go to one person versus the other? Those are the little things that matter to people. And that's what I would coach people on all the time, is making sure, whether it's talking about MI or just how their life is. Hey, I just drove past your house. I noticed you put up a new pool, or you're doing landscaping, whatever it may be. Like, these are little touch points that real estate agents or loan officers should be doing to show that they care.
Absolutely. I mean, people's lives are changing every day, whether it's they're having another kid, or a kid's going away to college, or somebody's getting a dog and they need a backyard, and they need to buy a house. So I completely agree. It's staying in touch with your clients, as much as possible, keeping that awareness, staying top of mind is what's going to continue to drive, into 2023, regardless of market conditions, where interest rates are at. You heard, Matt say, rates are high, but they're going to come down, and everybody that you work with now is going to be a refi client in the future, and you're going to kind of expand on that. So, well,
yeah, the other thing I mentioned to you, I had an interesting experience about a week ago, and again, maybe a target customer base for some of the people on this phone. I had the opportunity to speak at the University of Michigan Ross Business School. Great business school. The room was packed of kids. I'm going to say kids. Students who were in that low 20 age range. And I did a big presentation on UWM and who we are in the local community. And I was so surprised when I opened it up for Q&A. I had one person say, I have to ask, what is a mortgage? What is a mortgage? And it was interesting to me because it really made me realize that sometimes fundamentally people don't even know, for first-time home buyer, and that obviously would be the audience. So if you're an LO on here and you want to reach out to a community college or a local college, you want to go present or share your ideas to educate people about, hey, you're a first-time home buyer. This is what you can qualify for. This is what a mortgage is. This is what it means. You don't have to rent. This is how you buy. Like, there's so many avenues to grow, your customer base, to make sure that you're that regional expert, to make sure that, hey, if David's presenting to your local college in your area, that, hey, if I need anything, I know who I'm calling. Like, this is, and I'm telling you, I must have got 20 or 30 emails right after that presentation of people looking for help with a broker, or they wanted to work for the company. But the point was, like, it's a great opportunity to reach out and be the expert in what you do in your local area.
I see Lisa Marshall, who's in your backyard out in Michigan, going, "Oh my God, what is a mortgage? I love it."
Well, that's sometimes what we're dealing with.
Hey, that's what they're going to school for. Or we have to educate them on, one of the two.
You have to educate them
so that's great. Well, I got a few other questions coming in, and one's from Jay Hijazi. And if the purchase market is where most of the business will be for the foreseeable future, how can we help the realtors promote their business as our partner?
Yeah, I think, again, it's communication about products and making sure that the real estate agents understand what's available to their borrowers. I mean, you think about the temporary buy down period. We think about it as like you're dating the rate, but you're marrying the house, right? So letting people know that, hey, you can qualify for a lot more. You can buy a bigger house. You're going to go on a 2-1 buy down. Like, making sure that they understand what products are available to them really will help them win. And again, the real estate agent should be just as educated on mortgage product than the loan officer is. And a loan officer should be just as educated on the real estate transaction as the real estate agent. Like, you want to know your craft. Like, why wouldn't you know your craft? everybody wants to, you go to a doctor, you expect that that doctor really understands what they're doing. It's no different, in my eyes at least, when you're going to go to that mortgage expert or that real estate expert who's going to be able to help you with whatever your transaction or needs are.
Absolutely. And I think that, of course, like you wouldn't go to a doctor to get your teeth fixed. You're going to a specialist, you're going to a dentist, you're going to that person that's going to help you get exactly what you're looking for because they're the best in their field. And I think that I was having a conversation with a retail loan officer and his wife, and they're a team and they're very well connected in a particular market. They're kind of in that cool club with all the realtors and they get a lot of opportunities. And as much as those realtors love them, they couldn't get the deals done that they needed to get done for the realtors' clients. And that's been kind of a running trend. And now is an opportunity. They're coming over to C2 because they have so many more options. And that's another touch point that a loan officer can have with their realtors is, hey, I know I couldn't help you before, but now I'm at a new shop and now I know I can help you and I can add value to your clients. And we can have that kind of that camaraderie, those relationships and collaboration to grow. So that was another touch point that came to my mind for working with realtors and LOs succeed, finding success with them. Well, I think I'm looking at some more questions and I think that, one's pricing and pricing with credit unions, how they're out there. I know you guys have had the Game On pricing for quite some time. Curious to know your thoughts on Game On, how long it's going to stick around. Are you guys going to try to crush out every single other wholesale lender until you get rid of it? Or what's the plan there?
Well, we're going to continue Game On. Game On has been a huge hit obviously for us, for our brokers, and ultimately for the consumers. And we have, we're going to continue to do it. It's a huge home run for us. I think it's helping us all grow. But again, keep in mind that 78 or 80% of the business, I'll just round up, that 80% consumers are paying at retail places is more expensive, slower, and just completely archaic. So, while price is obviously very important and we're substantially beating everybody, but no plans to get rid of Game On at anytime soon. And we're going to continue to drive it.
Amazing. I mean, that price comes up quite a bit. I work with Danny Morogi at, one of your top AEs, if not the top AE at UWM, who's the lead account manager, the AE for C2. And I always try to bang them up on pricing. I mean, we're the #1 mortgage broker. Can we get some extra nuggets? I want a little bit better pricing than the Game On. And he says, it's not about pricing, it's about experience. And while I do want to believe him, I don't entirely, but it is about that experience. And, the fact that you guys have invested, in the right people and in brokerage for us to execute on the highest level, whether it's 7 days, 10 days, 15 days, and just blowing people out of the water, making realtors know that, we're ahead of the curve. Before, I believe, when I was in commercial real estate in a transaction, it was always like, all right, well, we've cleared these contingencies, but where is our financing? And I know that was the case, and that is the case working with a bank that needs, 60 days to close a deal is just unheard of on our side of the fence. So I thank you, I thank your team and your strategy for investing that capital in the right place to help us win and, and giving us access to those underwriters. For us to work through the nuances of each deal.
Yeah, and Dave, and just to be clear, again, we're building it for the future. We're not running our company for this month or this quarter, or frankly, even the next year. We're building our company for 24, 25, and 26 for long-term success. So even if you look at historical numbers, while Game On has been very, it's been awesome, it's been a home run, everybody's winning with it. The reality is, even if you look back, and when we talk to FHFA or, I meet with the CFPB, and we show them the data. Like, this isn't about UWM or our brokers. This is about where the consumer wins. And you show all of the data, and it shows, hey, consumer pays a lower note rate in wholesale versus retail. A consumer has lower closing costs in wholesale versus retail. X, Y, and Z in the speed. And when you present that data to them, they're like, well, why doesn't everybody use a independent mortgage broker? We're like, well, that's what we're getting to. So they even understand it's speaking with data. It's not speaking in just a point in time or anything like that. This has been going on and on for years. So these are facts. This is just not, opinion.
Yep. No, absolutely. And I've got another one for you. I mean, this is kind of, I think about this all the time. And these are, we have conversations with retail loan officers on a regular basis. And it does, it takes time to someone to finally take that leap. But what do you think is the biggest challenge retail loan officers will face when moving to the broker channel, and how can we help them overcome?
Yeah, to me, it's just like it's something new, right? That sometimes those retail LOs just get used to their system, they're used to their technology that they're using. Sometimes it's the fear of change, but the reality is, once they start to get into something, most of them are like, "I can't believe it's taken me this long. I can't believe I didn't make that jump sooner. I have all these products, I have all these different services, lead times, choices. Like, I mean, give me a break." And they have a huge toolbox now, as opposed to like one hammer. It's like they have all these different tools and they're able to use it. So to me, it's almost a no-brainer, for them to do. It's just a matter of breaking that seal. And before, obviously, when rates are low, it was easy for them because they're just they're just refining their own the servicing book, at that lender. But when that dries up and they really have to actually work and focus on purchase business, that's when that really pushes the envelope in a rising rate environment. We've seen it before, we're seeing it now, and now it's even been exponential.
Yeah, no, absolutely. And I think that, a custom success track that we've developed with you guys over at, UWM has been helpful in terms of getting, folks from retail to C2 and get them acclimated with your systems, getting more used to how to submit deals, how to get them, put together faster and execute has definitely given a leg up. So I do appreciate on that. And I am working with your team to kind of do a bit more customized approach to that success tracking, keeping it fresh, keeping people learning and doing that stuff as well. Who is educating the next generation of home buyers out there these days?
It's that's a great question. I mean, that's what we're talking about, right? I think that's where the social opportunity really is, with a lot of the TikTok and the Instagram, as Matt talked about in his video. I think that's a huge opportunity, right? It's free. I mean, you can go right on there, provide video content, but I would not underestimate how fundamental you have to be with it. Very basic 101. Hey, Mr. and Mrs. Potential home buyer, you're renting. Your rent payment today is $1,000 a month. In your local area, this is what you can do. This is what you can buy. This is what you can be qualified for. This is what it means. Here are the programs that you're eligible for. Like, these are the things that I think, from a first-time home buyer perspective, I think social is the home run in that regard.
Yeah.
But again, even looking at your previous borrowers that you've had, how many of their kids are in that age range? Let their parents help them. Call the parent and say, "Hey, I know I did your loan 6 years ago or 2 years ago or last month. I noticed your kid is 22 years old. Any advice you want me to have coffee with them? Any advice I can give them to prepare them for their next or for their first time home buying experience?"
For sure. I had a pretty short attention span when I was 22 years old. So I can only imagine what a 22-year-old right now is like with all the access to, all the social media stuff. So I think it's short and sweet and keeping it, concise and educating and hitting people between the eyes with good information on a regular basis and educating them to be aware of how to buy a house and where to go buy a house. And that's through the brokerage side. So, so I guess, can you give us a gut? I mean, this is crystal ball stuff, but can you give us a gut on rates, when you think we're going to get back down, or we're going to hit 5% here? What we're looking at? Yeah, any idea?
Yeah, I mean, short term, I think they're going to probably stay kind of where they're at. We're going to have a little bit up, a little bit down, but I do think they're going to stay on the higher end of things for the next 9 to 12 months. I think if we start to see a decline, it'll probably be as we get closer to the election. I think historically, if you look at the macroeconomic environment we're operating in, anytime there's an election, you start to see a little bit of that movement in the interest rate. So I would suspect that maybe we see something like that happen, but your guess is as good as mine. Just when we think it's doing one thing, it does the other thing. So, but that's kind of how we think about it. But again, in this environment, we all win together. Like, this is the time that we win, C2 wins, these real estate partners who are on win. There's a lot of business out there. And again, this is when, we're getting after it, working hard, put that extra time and effort in, making all those phone calls, following up the right way. Like, that hard work and that work ethic is going to all help us win.
Absolutely. I mean, we can't control what Jerome Powell is going to say today, but we're going to have to power through. There's no looking back. There's only looking forward. And that's why we're all here, to figure out, what we can do to add the most value, deliver good experience, and continue doing that. I just, I think that there's a lot of opportunity now with rates up, that we're going to be able to, brokers will also be able to continue to slide in and pick up some of the fallout from banks and credit unions. I know that there's been something mentioned that, credit unions have great rates, and, pricing is important. I saw Ann Geske mention, pricing is important. And, obviously you guys have given us some great pricing with Game On. Obviously we always, no good deed goes unpunished. We always want better pricing. That's the name of the game, but I understand you got to run a business too. So, I do think it's a huge opportunity for C2LOs to be, reaching out to their clients who have kids, whether they're 20s and 30s, that have no clue about real estate, financing, investing. C2 originators can educate them now, and maybe in a few years when they're ready, they'll be buyers. And hopefully, obviously we're going to have a deep relationship. We'll continue that. We'll continue to grow on that. We'll have great pricing, and we'll be in a prime position to continue to win together. And all those ships, continue to rise with this tide. So. Well, I really, really appreciate the time, Alex, for us to sit down and chat, and all your insight. You guys are doing great things, and we're kind of on the forefront of delivering those products with a great service, and you guys have our back from that. So I just want to thank you for stepping up. I know Matt couldn't make it, but you've been wonderful to catch up with. And you guys are trying to get us to come out for these success tracks in cold ass months in Michigan. I know. Is it like misery loves company, or what's the deal? Can't we just get spring and fall?
I know. It's I know it's not the most favorite place for people to be right now in the wintertime, but I can tell you, we have 300, 400, 500 people every single week from around the country here for Success Track. Just trying to get better understanding our products, learning from each other, networking with each other. It's a fantastic thing. I know obviously you guys do a lot with us too in that regard, but so just wear a coat, go buy a coat and come on up. I'll get you a hat and some gloves and you'll be fine.
Perfect. Well, you guys did build that big bridge. So whenever I come up, I never even have to go outside, really. It's just getting into the building. Just get into the building and
just
we're
get
good.
In the building.
So.
We'll love to have you out again.
Well, I appreciate you, brother. Have a wonderful day. Thank you again for the time. And I guess let's see here. Let's see how I do this. And well, that was Alex, and a wonderful conversation with him. And now we kind of powered through that Q&A. I know it's kind of pushing up on the hour. We've all got busy days to get back to it. And I'd love for you to connect with us. If there's any questions, feel free to reach out to us. You can visit c2financial.com. I'd love for you to follow us on social media at C2 Financial Corp. That's our Instagram, Facebook. I think we're working on TikTok still. There's still a lot of things in the work. We're all trying to grow this together. So really appreciate you all checking us out and the time. This is one of many to come to really educate, create awareness, and grow together. So for anything from marketing wise, reach out to marketing at c2financial.com. And I look forward to seeing you all soon. Thanks so much.